Okay, thanks a lot, Katerina. Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Today is Wednesday, April the 5th, 2017, local time 2 a.m., 7 minutes past the hour. GMT time is 7 a.m., 7 minutes past the hour. This is my first week in DST time. So, yeah, it feels strange. I got used to broadcast 1 hour earlier. Well, not that, but well, you know what I mean. So, well, today we're going to have a update on the levels that we commented yesterday. Let me just have a screenshot of them. And again, if you're wondering why I'm not updating any of the contests that I am running in this occasion, is, well, first of all, because due to the disastrous results last month, maybe one of the reasons I got those results is because I was trying to, all my effort was dispersed among several contests. So what I just decided for this month is just to keep it simple and just focus on one or two. Actually, I believe it's going to be only one. I've been running the social contest, but honestly, I'm not doing well right there, and I honestly don't think I will have this month the time to try to continue figuring out what it takes to succeed there. So I was just focused on the trader contest. So far, so good. I'm not updating anything before my first trades are closed, but apparently I started completely different from the last 2 months. If you remember the first month, January, I ended, I believe it was in the 15th position with 600 or 700% of profit, something like that. So during 2 months, I lost a lot. I lost the whole account, $100,000, first month and the second. So what I just decided to, my objective now is to recover those 200,000, and if I am lucky, maybe to have something extra. But that is my objective for this month. And of course, I just don't want to disperse my attention and my energy on how you say it, on other contests. I am really interested in some of them, for example, the daily stock option, but yeah, I have never ever traded stocks in live accounts. So yeah, for me it's like kindergarten. I need to learn from scratch everything. And well, I have to share my time among my live accounts, my contest accounts, and yeah, it's been kind of exhausting, and I believe that had an influence in the latest results. It makes sense, it's logical. So well, that is what I just decided for this month. So in the meanwhile, I closed my first trades. I have 3 trades open in my trader contest account. If you wish, you can go to the trader contest in the Dukascopy community. You can go there and check my profile. If you decide to do so, you can subscribe to my signals. In this case, this month are going to be very different, in a very different style, much more closer to the way I managed the signals. The contest in January. During February and March, I tried to grab. My intention was to grab every single pip. It didn't work. So in the meanwhile, I figure out if that change of a strategy or the stress, what had the more influence in my bad results. I just decided to come back to what it worked for me and try to see it more strategically. In the first January's contest, I don't remember exactly the the amount of trades that I opened. I believe they were like 30 or something. I don't remember. So in this case, I will try to maybe trade less, but more strategically and smarter. I will let you know why I decided to do so, and apparently it's paying off. Of course, the competition just started. We already have a lot of traders doing terrifically well. But well, the idea is to keep up with the competition. This is what I said on January. The idea is that you manage to simply hang in the competition and to hang your trades and to manage your trades until they become profitable and you can close them in profit, and that will push your account upwards. The problem is that if you miscalculate and you have a margin call or you miscalculated a stop loss, it would be very difficult that you can come back. It is possible, but it's like you will be using all your energies just to recover the losses instead of winning something. So that's like not a lot of reward, right? So well, this is my plan for the month, and that will be reflected in the price boxes that I share with you. Because even these latest days I've been sharing price boxes that are very short term. My view, for example, it's try to scope more days for a trading setup, meaning if for some price box a trading opportunity arises, of course the idea is not to close it maybe 2 days after, but just to see when those boxes expire, to see if I can actually hold the trades open, trying to maybe continue with a potential movement. In dollar yen, since I changed my bias and I explained why in Monday, I believe, yesterday I also explained why, I am seeing a lot of potential to continue the movements to the downside. We're going to check them out. And first of all, this is the price boxes that I shared on April 3rd. It was Monday, so I was saying that these were two simple boxes. I didn't have enough information to know, for example, to know if I could extend this resistance up to this point. So I just let it here. This was like, I was very sure it was no longer, and you can see that after putting this box, when this box expired, actually the market decided to start selling off. So I was explaining this yesterday, that when you get used to this kind of thing, this is like normal. The markets move not only accordingly to time, not accordingly to price, but to time. I'm not going to say specifics on this, but some time ago I came across, let's say, somebody that was sharing his ideas on how to trade the markets, but completely ruling out time. According to his explanations, time is irrelevant in trading. And thus, all the strategy that he uses like, how you call it, Genko price box, something like that. There is like a kind of charts that are circles and crosses. I believe that they are called Renko charts, that are zeros and X's, that apparently those charts rule, I don't know, I believe they rule out some way time. But the thing is that I completely disagree with this approach. Of course, this is irrelevant. The thing is that if you find something that works for you, even if it's illogical for the rest of all, that doesn't matter. The only thing is that it makes sense for you. That's the only what it takes, and the only should be interested. Okay, so but in my opinion, time, the market is a combination of both. If you taking out time out of the market, is like taking out price, because it's correlated, not in the flat unidimensional way that maybe the traditional charts show. Like, okay, you have the axis of time, you have the axis of price. and you just see the price moving and moving forward steadily, continuously, like with no meaning, and the only thing moving is price. No, that is not the case. You need to see time creatively. In other words, in my experience, is not seeing it, but feeling it. You are aware, and for the ones that are maybe not aware of that, what I call my edge, it's hugely a part of subjective things, like how you feel, how I feel the market, how I imagine it. I could not say to smell it, because that would be strange, because I don't smell the market. But yeah, I have developed some kind of maybe skill that has helped me to feel things that maybe at some time just my body says, watch the chart, and go and watch the chart, and if I see it in profit, I close it. So it's strange. My edge has a lot of subjective elements. The way to understand time, it's more or less that way. That is why I am saying it's as important as price, but it's not as, you cannot read it in a chart. In my case, my body is the one that is telling me that something, that I need to do something. For example, if I go to a chart and my trade is in a loss, even if it hasn't touched the stop loss, if I feel it, I feel it is time, I close it in losses or profit. And that is how important time I believe is in trading. I can tell you that it is even more important, because if you miss time, and you can even read this in traditional books about the markets, the most difficult thing of the markets is the timing. Because you can be right in a direction, but if you miscalculate when it could happen or when it could stop, a profitable trade could become a losing one. So this approach of this person, I am not saying is wrong, because if it works for him or for anybody else, that's what's important. That's what it takes. But in an overall structure of the market, timing, I believe it's like denying space. We move in time and space, and we have time and price. So ruling out time from time price is like ruling out time from space. So we stopped. If you do that, it's like if you stopped being a three-dimensional being in a four-dimensional space. In a four-dimensional, you're moving through the fourth dimension. So it is like I wouldn't feel comfortable just to ignore that huge fact. Okay, so but if it works for these guys, if it works for somebody, it is okay. But you would be missing a lot of useful information if you just rule out time. It's like, for example, in a buffet, skipping, I don't know, certain kind of sauce or say certain kind of vegetable, that maybe that could enrich your gastronomical experience multidimensionally. You are free to ignore that spice, for example, or whatever. You can do it, but when you ignore it, you're missing a lot of interesting and useful stuff. So that is the power of time. Okay. These boxes are exactly designed to more or less give us an idea when something important could happen. And we have a comment here. Rocas, how are you, my friend? Good morning. How are you doing? Apparently, Katerina had to run back to a meeting and just left the recording on. So that is why maybe she's not answering you. She's, I believe, still in the meeting. But thanks for logging in, my friend. And, well, this is precisely the importance of these boxes. That when you have an idea of a potential time cliff or time ceiling, everything changes. And this is the example why ruling out time is not like the wisest thing. When you rule out time, you simply deny to yourself this kind of way to figure out a strategy. When you have different levels, and for example, you have this time cliff, of course you can figure a strategy in a completely different way than if you didn't have this reference, for example. It makes a complete difference. You could be bearish, and if you see this, you see that the closer the price gets here, the more probable is that it could start selling. The more probable. You don't have certainty, but you have another tool. Denying using time in a creative way, not a linear unidimensional thing in a chart. That is not using time. Using time is more or less this. It's a very subjective thing. You can find other ways to use time in your favor. But this is just one example how different it looks. Okay? So, well, this is no different. I put this more or less here, the price, when this price box expired, just decided to recognize it and started selling off. This is what I put on April 3rd. What I put yesterday was this. I was saying that according to the latest price actions, I was considering that this resistance should prevail up to the next hours. As you can see, maybe this is just about to expire in the next 4 or 5 hours. And if it made it to get inside here, and my initial expectation was to get here, it could hover more or less here or here up to the non-farm payroll and then maybe move to the upside or downside. In the charts that we were explaining yesterday, we had a descending line. I believe it was kind of here. No, it was like in here or something. And I was saying that even if the price managed to stay inside this and avoid to fall further at this time, the risks were that the price could get here at this time. That would have been truly dangerous for dollar yen. And again, this is how, if you figure out a creative way to use time in your favor, it changes the whole picture of trading. Because when you have this and you have the price here instead of here, then your expectation of what the market could do is completely different. In regards to volatility, for example, if you have the price here, maybe you would expect huge volatility to the downside. But when you have it here, you know that maybe you will have natural resistances here. So any kind of trading strategy that you could be designing on dollar yen, and you consider all these aspects, changes money management, for example. Because if you, let's figure, imagine that you say, I believe that this will continue going down. Okay. According to the current state of things, maybe you would say, I will sell. And I know that I can put maybe a stop loss here. It's a acceptable stop loss. It's a 50 pip stop loss. And you can expect that maybe at least it moves 50 pip in your favor. Let's put it, let's say. Imagine that you say that. Okay. It's not the same when the market is here. Because if the market is here and already started moving down, and you say this will continue moving down, you can sell. But on the other hand, you know that you can have wild swings to the upside, even up to here in some time, at some moment, and then continue falling. So if you open a very straight here, you should maybe use a super wide stop loss up to here. For example, if you decided to short here, close to this resistance 111, well, you know that maybe here it's more than enough. And if you decided to go long, maybe you would say, okay, I will put a stop loss here. So these boxes shape all the trading plan. Continuing with that logic, if you decided to go short here and the market makes it here, maybe you won't decide to close it. but you need to be much more aware, because here, according to at least these boxes, you have anything. So yeah, you could have some attempts maybe of the markets to start moving upwards, yeah, with maybe no real resistance here. But yeah, technically we still have a resistance, a line here. I will show you that line in some minutes. But it gives you an idea, and again, you start feeling the market. When you try to trade here, you feel something, because you know you have here and here. If you trade here, you feel different, because you know you have here, but you really don't have anything here. The same thing here, the same thing here. That is using timing. It is not the same to short here, that you have no bottom, that to short here, that you at least know, according to these boxes, I mean, you could have a support here, right? It's completely different. So your plan changes. This could be a longer trendy movement, and this could be maybe a range-bound movement. So that would change even how you read technical analysis. Because when you read and I really get angry every time that I hear or read in the books, the trend is your friend, and they tell you in the books how to trade trends, how to detect technical setups, and when you try to apply them in real trading, you lose all your money, because at the moment you receive a buying signal, the market is starting doing the opposite. Why that happens? Precisely because of this. If you are in a range box, let's put it this way, if you have here a selling signal, you're not in a potential trendy breakout. You're the most likely thing that you will find, the lower it gets, the more support you will find, and then a selling signal becomes a buying opportunity. If you receive a selling signal maybe here, yeah, you could have more chances that you can execute that selling signal and not revert it, execute it as it is, as a selling signal, and grab some profits or even profit from a bigger movement. So this is the magic of this that I offer to you. That this is, I don't know if you remember, at times I say that I use traditional tools, but I have developed the skill to read them differently according to the circumstances. I change how I see the world, how I see the market, and I don't change the tools. I just read them differently. This is exactly it. If you read technical analysis, maybe an example, buying signal here, and you see the context, etc., including these boxes, and you say, okay, I'm receiving a buying signal here. But in order to really trust a buying signal as a buying signal, it should happen from this moment on. So all the buying signals here, maybe maybe the smartest way is first you ignore them. Either you ignore the buying signals, or maybe you read them as selling opportunities. If you have a selling bias, maybe you would say, okay, I can sell here in a range bound in an overbought condition. It was so overbought that it triggered a buying signal. So I sell here. I am bearish, for example, and then I hold that trade. Here I take precautions because I know that, and I start looking for buying signals and see how the market reacts. Why? If I am holding a short trade from here, and from this moment on, you know and you realize that any buying signal could mean a severe movement to the upside, then at every dip, but overall every buying technical signal, you need to be very aware how the market behaves in order to decide whether to close your trade, take a loss, or maybe the market confirms you maybe that the market maybe won't move to the upside. These are no flawless tools. I mean, the other picture that I showed you, at the moment it expired, the market started moving downwards. But that doesn't happen all the time, okay? These are not flawless. This doesn't mean that you could not have here a complete direct super wild bearish and sell-off. No, that doesn't mean. It can happen. These are only references for your day-to-day trading. And let me see, because okay, yeah, we will analyze this in tandem with this, with the where it is. Okay, well, just before continuing with the current price, Japanese yen price boxes, I will just review quickly the euro dollar and the pound. Because as I said, I was expecting, I'm still expecting a slightly bearish week for dollar. Maybe non-farm payroll number could change that. But my feeling is that, yeah, we could have expected a slightly bearish movement on dollar across the board. Overall, in dollar yen, this has been happening very nicely from here. The dollar has moved the weekend nicely. And I was commenting, due to political, etc., and different reasons, that we should look the euro dollar because in an expected dollar weakness, if you find that maybe euro dollar is not really responding bullishly, this could mean that the markets could be preparing for a surprise in the elections in Europe that couldn't benefit the EU, the European Union. Okay, but well, even though the market has been doing in euro dollar lower lows, this is the hourly chart. Lately, it just recovered above the moving average, this 14 moving average. Convincingly, it has stayed above this line for quite some hours. So yeah, I don't like how this looks, because this looks pretty heavy to me. But yeah, of course, this changes a lot. So yeah, maybe the euro is not preparing for a bad surprise. The pound is doing not that maybe convincingly, but the difference is that maybe we don't have any kind of movement to the upside, but at least it has steadily supported much more bullish sentiment. Because if you see here, you can draw even a trend line to the upside from here to here. You cannot do that here. You actually draw a downtrend line. So even though this movement to the upside in euro dollar is way better, and this has been like consolidating in a range, in that overall it's better, in better condition than euro dollar. These both economies are attached, even with the EU between them or not. So no-brainer thing should mean that anything bad that happens to the EU will hit negatively the pound. But yeah, what happened yesterday, this is euro dollar again, and this happened yesterday. By yesterday at this time, we were here. It was not looking good at all. So just after the webinar, the market just recovered a little bit. So now you can like feel like maybe if there's going to be a movement to the downside, at least took it time. Okay. So yeah, maybe this is a relief, because having markets positioning themselves to a potential panic sell-off in euro, it couldn't mean at all a good thing for anybody, at all. So that would be, as I said, if we really have a euro crisis due to something happening in France or in Europe that could destroy EU, that will be the next financial crisis, and that will be the worst financial crisis, the worst ever, even worse than this 2008, because this would simply even destroy capitalism as we know it. So yeah, in my opinion, it's very relieving that we see that we're getting closer to the elections in France, and Europe is giving signals that you know what, we're not just ready to test the won the party. That's good. That is confirmed indirectly by the pound. That is not being in a buying mode, but it is not either in a selling one. Okay. Unfortunately, and before beginning with this, and for the ones that follow me for long enough, you know that I like very much to talk about politics, your politics, your strategy, etc. It was, I even feel kind of depressed because when I woke up, I just saw this chemical attack again in Syria. We just had yesterday a terrorist attack in St. Petersburg, I believe, in Russia. You have a lot of things happening in the world. It's so sad to see that. And beyond the subjectiveness of all those events, overall, this kind of chemical things hit me a lot. Just to see little babies, little kids, like if you had sprayed on them insecticide, because that is what a chemical weapon is. It's like what you do when you see a cockroach or some insect and you spray insecticide on them, they suffer. But if it is way different when you see it in a human. You start thinking how much creativity and intelligent people dedicated their lives to find better ways to kill people. That is something that I just disappoints me so much of the human species. It's like simply it has no sense. This brings an extra layer of uncertainty because now we have, and just one day after the Russian attacks, you have this that could have been read as a response or something like that. Of course, it's not that easy because when these kind of things in Russia happen, it is the best excuse for somebody to try to attract the United States into a kind of conflict against Russia, etc. So it's these war games are really sophisticated and really complex, and the civilians are the ones that are suffering a lot. And this brings an extra layer of uncertainty because you don't really know what could happen next. For example, if this attack happened, well, a lot of people wonder, was it Russia in response of the terrorist attack? Was it Russia? Was it the Syrian regime? Was it the opposition? Was it ISIS? What's going to be the response from Syria, Russia, United States, NATO? Things are very delicate, in a very delicate state. And I don't know, I believe that Rokas is informed about this, but I read yesterday that I guess the defense minister of Lithuania was accusing that Russia was actually preparing, with no doubt, a military movement to the Baltic countries, like wanting them to invade them and annex them. So when you have this kind of noise, and then you have North Korea testing missiles, etc., when you have this kind of noises around the world, and suddenly, boom, you have explosion in Russia, then you have chemical attack in Syria, then you have instability in North Korea, then you have it is like spraying gasoline on some place and then start playing with matches. It would only take just a spark to detonate a huge conflict with dangerous consequences for the whole life on Earth. Seeing the charts, euro dollar, pound dollar, even after what happened yesterday in Syria and Russia, etc. Overall the euro dollar, because it is carrying on the extra risk, you could have expected that at the first sight of, maybe has nothing to do with the euro economy thing, at the first sight of extra risk, the worst hit should be the euro. It's logical. The weakest, when you hit the weakest, is the one that is laying on the floor, not the strongest, right? So yeah, seeing these both charts are kind of things that help me to not to be that fearful. I mean, it could sound ridiculous, but when you go to all the news sites and etc., and you hear that amount of noise, and you learn to subtract information from the markets, you can have your own opinion using alternative tools, and maybe say, okay, no matter how bad the news look now, maybe we're not that close to the abyss. Maybe we're not just in the brink of a retaliation of some kind, etc. So, well, this is one of the other, in my case, uses for the financial markets. And to share you what I expect, the update of the trading boxes, price boxes, sorry, this is it. This is the updated version. Okay. You can see this looks pretty much more complex than the previous ones. And as you can see here, actually we are in a much more confident support scenario with no ceiling. But the updated is completely different. That doesn't mean that these levels will lose validity. No, that doesn't mean that. What it means is that you have also these ones. According to this, we're just about to enter into a potential no ceiling potential movement. That could happen, yeah, but maybe it will be stopped here. According to this, we're just about to enter, by the way, this is the 4-hour chart, so this is not precisely noise. We're just about to enter in the next 8 hours into a potential selling mode. But we will be still having a support here plus the psychological 110, that is this one. So both things need to be read in tandem, because if you see here, the 110 support is represented by this. In this case, the 110 is more or less here, that is represented by this. We don't have that support here, but we have it here. Difference is that if the market actually gets here, let's say at this point, and hits here in a potential selling off of setup scenario, you could have this supporting this, even though it is here, plus this and this psychological, that would make sense. But if you feel it, and this is how timing I use it, how I use and understand timing, gives me an idea of either whether we have a potential movement to the upside here and a support here, and maybe we could have a cliff here and a potential resistance here. Look at this. Look how these boxes converge. We have isolated boxes. But in this case, I feel this makes sense. Why this? You see? This is another resistance that, by the way, this is like fortified by this line. Plus this, plus this, plus this. Yeah, it looks very tough to break to the upside. And that is when you make your subjective analysis and you start confirming it with mathematics. If you have this, this immediately gives you an impression that this is like a concrete block, even if you have open ceilings here. And even if you have a support here, you could have several amount of resistance here that maybe it could break when it starts moving downwards, it could break this support. Even if we retest here, why? Because even if we retest this lower low at 110, more or less, we are already in a channel down 82% super high quality in the 4-hour chart, showing you that a potential movement could even move here. There's another landmark in the sand. This is a straight line, is when the non-farm payroll number is going to happen. And the hourly wages that usually have had a more and more influence on the price reaction. It makes sense. So all this opportunity window, it's precisely due to this, because after this moment, overall this support fades away. After this non-farm payroll number is where exactly this alternative support to this and to this zone shows up again. Considering major news releases, how you trade the market is super important. Not because it is important that you know what the market will do. No, that's irrelevant. Of course, if you have a lot of volatility, it could trigger your stop loss, and that's it. Shouldn't mean any further complication. But when you start reading this, it's okay. We have this 1, 2, 3, third resistance here. This is a zone. It makes sense. If you see the shape and the thickness is okay, I have a thinner one, and then it gets thicker. Meaning, and using the language of time, the more time it passes, the thicker it will get. And besides, the more resistance I will be getting here. If for some reason it stays here, that doesn't mean that it will drop. But if in any case it drops, it could drop up to here, no matter if this 110 is retested, because of all the context. And overall, because yesterday, it should have been easier. I mean, from these boxes are the result of yesterday's price action because of this movement. Because it was like, okay, then we're having a lot of support, and then we're having the market being rejected just ahead of 111. It's like, okay, this is not as clear as only using two boxes. So firstly, you have a potential, if the things have behaved way more predictably, maybe you could have expected that that if the market had stabilized here with no further moves, maybe you could have expected, okay, here's a series support, and then we could make a retracement to the upside using only these only two boxes. Because the market, the simpler the market moves in the simpler way, the less boxes you need. Because the market is meaning that it is moving predictably. You need to use more boxes when it becomes complex. So this thing, I didn't like it at all. I mean, not even. I mean, it didn't even touch the 110. That it was like the, okay, if we're going to find serious demand, it's going to be in the 110. After the sell-off we have had in the latest days in the dollar yen, the real demand will happen, and you will start seeing it there, not here. So I said, okay, let's try to factoring it in, and factoring it in also this fact that I was expecting a much more simpler move that would have been defined enoughly with two price boxes. and it didn't happen. It should have been the price action in a way that this would have defined the next movement of the next hours and allowing maybe a potential retest to the upside here. But look what will stop it here, not only this line that we talked about yesterday, but now these two boxes. I mean this box or this box, but they got connected here. Okay, so yeah, it is like, okay, I was kind of having a certain amount of bullishness here, and suddenly it switched to this. This has an effect that you turn from being more or less range bound into a much more potential movement to the downside. Here the potential movement to the downside was even profited 100%, but now it's even bigger. Why? Because the market really didn't behave in a convincing way that could tell you that actually the demand is already active. So maybe the market is much more willing to retest even further down. In any case, this doesn't happen because this support is good enough to support any kind of movements to the downside. We will get into a lot of trouble here. Because if we get more or less in this area by non-farm payroll number, and the price is already here, look the mess. Resistance, resistance, resistance. So the thing is that if we have here, what I can tell you is that the non-farm payroll number will have an explosive effect either to the upside or downside. Just because of the price action activity, I don't need to know the deviation of the data. I can tell you from 2 days, 3 days in advance that if the market stays here by non-farm payroll release, look the pressure. You have this pressure. You have this pressure. You have this pressure. It will be so tight, the pressure, just wanting to release into one direction or the other. So it would only depend to have the market slightly deviated to the downside or slightly deviated to the upside to have a massive explosion. Up to here, up to here. The markets love to do that. Broader picture, I believe that in this case, the market should be below this box when the non-farm payroll comes into play. Why? Because even when the markets love to position the price in a time and in a circumstance where they force the markets to have a huge reaction to squeeze it, because they love to do that, it is very difficult because markets tend to find equilibrium points. This wouldn't be an equilibrium point because precisely this would you could expect to happen if the market is here by non-farm payroll number, either a huge reaction to the upside or from here to here in a matter of hours. And that is something that is not in the best interest of the biggest participants in the market. What I believe is going to happen, the market will be below this level by non-farm payroll number release. Okay, we could still have here like a support of this region. So it would make a lot of sense if you have a positive data, maybe this could jump here and to be stopped here. And if you had a very bad data, you could have a wider movement to the upside, but it would be like much more manageable than having from here to here in all of a sudden. Okay. You could have the market move lower and lower and then do this. All the swings precisely help the market to hold a healthy position and not all of a sudden. Okay. So, well, this is I'm going to call it a webinar today. I was asked by Katerina if I could, if I believe the Dukascopy team is going to use my tomorrow's session to do some, I don't know, advertising or something to record something for the J4X3 platform. I was asked to if there was any problem, if they can take my time slots. I said that it was no problem at all. But then I would like them to take Friday off too. I will come back on Monday. It's Monday, what? Monday, April the 10th. So just to let you know, I won't be broadcasting tomorrow because of the Dukascopy J4X thing that will happen during my time slots. And on Friday, because I will then take that day off too. Okay, so that is why also I try to find some price boxes that could work for the next 2 days up to the non-farm payroll number. And by the way, if for example, if you have a non-farm payroll release here, the most likely thing is that if the market gets stuck here and we get here, then it's boom to the upside. So the only way to avoid that to happen is to have the price here. Apparently, for some reason, the market is taking some precautions. I don't know if they are euro related or what. So yeah, it would be very interesting because overall it would be very boring to see the market just moving this for the next days. But yeah, it could happen. So I would like to thank everybody for showing up for the webinar. Rocas, my friend, thanks a lot for being around. Wilco, I didn't see when you log in. Thanks for showing up, for logging in. And I don't know, I believe Katerina is not back yet. In any case, that you're broadcasting, Wilco, Katerina apparently is in a meeting. So she just told me that she had to step to run back to the meeting. And the recording is running. So maybe if you have a webinar just after mine, maybe you could just start and maybe she would just edit the video to divide the 2 ones. But well, that's what I believe. So thanks a lot everybody for being around. Remember that I expect you on Monday. Okay? Not tomorrow, not on Friday, but on Monday, to see how this finally played out, the non-farm payroll number in the Dukascopy, in the dollar-yen pair. Remember to trade safe, be safe. This is Alberto Alvarado, and bye-bye.